JB here. Hope everyone's doing outstanding. Friday, October 10th, 9:16 a.m. Let's find a morning talk. Really quick about the market. Some names. Look at go from there. Futures pointing to a green open. Seems like we've been going back and forth between red and green this week. S&P's up about 0.25% for the week. So we'll see how if we end the week in a green. Not much away to catalyst. We have consumer confidence data out at 10 o'clock next week. Was supposedly, I think on the 15th was going to be the CPI data. That isn't going to come out on the 15th, but they supposedly have brought back some furloughed workers to possibly get that CPI data out. The thing with CPI data, that's like a data point that is used for like Social Security and things like that. So it's like important to not just for the markets to have some kind of visibility into inflation, but also for other important things, right? So we'll see if that comes out next week or if there's more of a timeline on that. But outside of that, not much else in the way of catalyst. There's more Fed speak today. And then next Tuesday is the official kickoff of the earnings season with some banks. Um, so as we have this kind of, the government shutdown, I guess it's what, day 9. And then it's another one of these news vacuum, well, this catalyst vacuum time frame where it's just filled with headlines. And some of these headlines, it's all about the bubble. It seems like, and there's always talks of bubbles, right? You have those perma bears every couple of months, especially after a market rally, talking about you know all the different stories and narratives that have come up over the years, right? The record amount of margin debt, right? So that always comes up. There used to be the Hindenburg omen. UPB used to talk about this a lot. Unfortunately, the person who created that, RIP, passed away, but there was like some correlation with all these different things that came up that would trigger a Hindenburg omen, right? Which never, for some reason, it worked once, and then the 10 other times it was mentioned, it never works, right? Um, but the dot-com bubble is always one of those parallels. People do like the chart overlays or whatever. So, of course, Market Watch this morning, which I always read. I read it. I don't just read it for comedic relief, right? Because I think it's always good to have all different sides of arguments because, you can't sit there in a bubble and be naive and just think the market's going to go on an epic rally all the time or vice versa. You can't just sit in a bubble and think that the market's always overvalued, which some of these folks always seem to think. But this morning is traders are talking up a 1999 like melt up, but here's really what happened back then. So pretty much the parallels with the dot-com bubble, and things were different back then. I mean, companies were trading not on any, all pre-revenue and just nuts, right? Bonkers valuations, high debt. So fundamentals a lot different this time around. But this I kind of agree with, and they talk about some parallels between 1999 and now is that even if we are in a bubble, in October of 1999, the markets had already been on an epic rally. NASDAQ was up like 100% over the past year and a half or whatever. And then it went to rally another 100% over the next 6 months, right? So you could be playing for the bubble, right? And a lot of those perma bears, that's all they do is they play for it, and then they pat themselves on the back when they called it, right? But how much do you have to lose, or how many times over do you have to be wrong to finally get it right? I always make that joke, right? That a lot of these perma bears have called, 120 of the last three corrections, right? So just a great little piece there. So, you can do all this research just like in the Big Short, right? He was very close to having to liquidate his fund because he was right on the mortgage-backed security and the whole financial crisis of 2008. But the timing, right? It's all about the timing. So great little piece this morning. So just a little color there. Also, nice little chart here. And maybe this weekend I'll finally get time about the circular economy. I guess maybe that's what we'll call it, the circular arrangements, the financing that's all done, and the deals and the revenues and the customers, all this, how they're all kind of interconnected. So at some point I'll take a look at that. But I thought that was a nice little flow chart there. And then last but not least, this came from MarketWatch too. Excuse me, sorry about that. The S&P is on a record streak. I think it's the fifth longest in history of consecutive days over its 50-day moving average. So I think, and if you look at his history, I think over the next month the market is a higher from where we are now, 110 days. So and it's still active. We'll see how that plays out. But someone of note, and I put on watch this morning, that 50-day moving average, the amount of stocks trading over there 50-day on the S&P is starting to trend a little lower. So some to note. All right, so that's kind of just overall nutshell here. Markets, take a look at the SPY. Talk about 670, I think it was 672.93 or so, and to 660. Broke through that on Wednesday into Thursday. So now maybe 673 here today is possible resistance. And then if things get sellers come in 669, I want to see that hold. If that breaks today, I might look for some spec lotto hedges just for today, right? Just for some swings. but the playbook, or at least what's played out the last couple sessions, it seems like the market does its direction. So Wednesday was to the upside, and then it chopped around for the rest of the day in a tight range. Yesterday was to the downside, right? Found sellers hit 1030, hit the lows, and then chopped around for the rest of the day. So I don't know if we'll get another playbook here today. Find the direction and then chop around for the rest of the day. Hopefully, we get some moves to make some money on some lotto. So that's kind of the overall market. Now, quick on individual names. This time yesterday morning, I was talking about SERV. I don't even know what it was trading at yesterday morning at this time. Maybe it was $16 where it is right now. Monster One all the way up to $18. I mean, call me the market guru technician, right? The chart technician expert. Sense my sarcasm. But take a look at my support resistance line on SERV. That's been there for months. We came right up to that yesterday and pretty much closed right at it. And then I don't know if I talked about it on the rant, but it's like any smart company that's still in the midst of scaling out. It's like you're almost, I hate to use the word stupid, whatever, but it's like, it's almost like negligent not to raise money or capital with the stock up 34% this week. I hate it, right? Because if you're in calls and the stock's down, you're like, come on, this stinks. But it's almost like you're not a good CFO if you don't take advantage of it, right? That's why your publicly traded company have access to the capital. So they announced a $100 million offering this morning. The stock's at $1 billion, so 10% of its valuation. It looks like the offering's at $16, and it looks like it's direct to investors. So to me, maybe it takes out some possible headwinds, right? There's always that overhang of a possible offering, so that's out of the way. Stock's in here at $16. I was hoping for JOBY to do that red to green reversal after its offering earlier this week. Maybe SERV is going to teach JOBY a lesson and show JOBY how it's done. But we'll see if it starts to reverse, gets over $17. I would love to see a reversal and a monster FOMO move above 18. And I would love to try and maybe like grab some more calls, but I'm sitting pretty. I've already locked a lot of profits in, so it doesn't make sense to like overtrade this. So I'll just continue to hold what I have. Locked a lot of more positions in yesterday. Added some March strikes. They were close to a double. At some point, I look to lock some of those in just to cover costs, and then serve as kind of like a risk-free trade. And nothing's risk-free. Obviously, I want to make a lot more coin. $18, right? That's the key spot. It gets over 18. I think there'll be FOMO. I'm surprised too because I thought it'd be gapping higher when you have these names that are on monster runs the day before, and then in partnerships with DoorDash, you would think there's folks who are not accustomed, who have never seen this name before, and then they discover and look at it and say, wow, 1,500% top line revenue growth for next year. Great sector. You would think I thought it'd be a higher gap before that offering news came out. So maybe over the weekend. All right, so that's SERV Robotics. Duolingo opened, ran up to 350 and changed almost to that 355 handle. I got close to adding some strikes, and then it found pressure with the rest of the market. Chart still looks nice here. If it gets over 355 today, I'll look for some more strikes into next week. Reddit added some more lottos yesterday morning, right by the noon hour. It looked like some choppiness. It was ready to break out. There was also a report they were doing Ask Me Anything on the OpenAI developer conference at 2:00. So I didn't know if that was going to add some wind in the sales. Then it took off all the way up. Let's see. I don't even know where I got it. But you take a look at the chart, 7 sessions of chop. One of these sessions is going to break out. And, me, I'm biased. I think it's headed to the upside. So if maybe it gets over 218 or so today and breaks out of that channel, I'll look to get some strikes into next week. Obviously, I'm still holding the lottos. I locked some of my calls out. The weeklies I got yesterday for over 100% to cover costs. I'll probably lock some in right at the open and then ride the rest. I still have some 240s that are freebies. Those, unfortunately, pending any crazy move here today. That's Reddit. Dell and HPQ disappointing yesterday. Dell doing what it does, disappointing. The thing is, Dell's still up 10% this week, so it's not like it wasn't on a monster run already. Pull back with the rest of the market. I still think this heads to $200 now. So I'm not sure if it's gonna be today or next week. I'll look for some other strikes to play for that move. XYZ ended its 6-session winning streak yesterday, closed pretty much flat as a pancake. I might just close the rest of the calls out to lock the profits in and then possibly revisit. And I think that's it. If things get weak, take a look at Oracle today, all the way up to 304. It would have been a really good week this week if I had just closed my Broadcom puts and Arista puts and then just went the other way, right? This morning, Morgan Stanley raising their price target on Arista Networks. That's trading all the way up, 159. And then Lottos today, right? MDB, which I'm surprised is not moving as much as Snow is. So it's running up here a couple bucks in the pre-market. has always has well over the last couple of months has provided some nice lotto opportunities on a Friday. So don't be surprised if I had some lottos there. And let's have a great day. I'll be back. Rock and roll.